Here we have the current stock market update for SOUNDHOUND AI Incorporated, stock ticker SOUN. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So as we can see here, we have the hourly price chart, and we're currently moving into a bit of resistance area here. And there are some very significant price zones that I think traders should be watching so that profitable trading strategies can be developed for this stock going forward. So in this video, I will be outlining some of these specific price zones and explaining exactly why they're important and what they mean for SoundHound in the days and weeks ahead. So if we're currently looking at the most recent price movements here, we can see a bit of a rally here that has started to develop ever since share prices managed to find a bottom at $3.94. This would have occurred during the August 5 trading session. And then as we can see here, share prices did move into this 550 area before starting to reverse lower. Now, in my view, this 550 area is extremely critical for a few different reasons. And all of these reasons are sort of working together. So in my view, this area is going to be the most important level to watch here going forward, or at least in the near term. So as we can see here, the initial rejection from $5.50 did ultimately send prices lower, and we did accumulate lows for the stock coming in at $4.74. So this was significant in terms of establishing a level of support here, because as we can see, the share price did manage to move higher quite quickly, and again retest this important $5.50 level. Unfortunately, the share price did decline from there, and we moved back into the exponential moving average cluster, as we can see here. So ultimately, here's the price failure at $5.50. And then as we can see here, share prices move below these yellow lines, orange, as well as purple lines. And then we sort of bounce off of the blue line here. So essentially what this means is that we have now fallen back into the exponential moving average cluster. We're sort of caught in here at the moment. And that does tend to be significant because this tends to mean that share prices have a harder time establishing a trend. So once you're caught in the exponential moving average cluster, sometimes it can be difficult to get out of the exponential moving average cluster. Once the movement does occur, then you have an established price trend, but you really have to wait for the direction of the break in order to make that assessment. So as things currently stand, we are looking at this important 550 level. So why is it so important? There are a few different reasons I suggest this. One would be the fact that it's currently marking a double top resistance zone from the historical perspective. So as we can see here, share prices have tested this area on two separate occasions. So here, this would be the first test, and then here would be the second test. So we can sort of drill in here a bit, and we can see that share prices are declining in situations where they are reaching this area. Okay, so in addition to that, we also have the fact that this green, sort of light green line is here, and this area marks the 61.8% Fibonacci retracement of this massive trending move lower. I think that some people that are analyzing the stock might sort of do this analysis incorrectly and probably look at the upward price movement as the dominant trending move. However, this is not what should be done here, because as we can see here, this prior price low coming in $3.94 would have broken through all of these Fibonacci retracement zones. And essentially this does suggest that, the movement itself has retraced itself. And in other words, this trending movement has already completed itself. So we have already seen that reach the endpoint with this prior uptrend move. So the proper way of doing this would be to look at actually the downtrend move as the most influential and significant price move that is currently governing and controlling share price action for this stock. So this is important now because essentially the Fibonacci lines are going to be in reverse. And as we can see here, this is the proper way of analyzing the situation, because this is what gives us the 61.8% retracement that has created this double top resistance zone. So if we were to do this in the other direction, these price levels would not match up and they would be giving false signals. So this is very important here. In addition to that, we have to look at the indicator reading at the bottom of the price chart. So here we can sort of make this larger so we can see things a bit more clearly. And here we can see that the indicator reading itself is trading toward the lower half of the histogram. And the overall trend momentum here is dominantly bearish at the moment. As we can see, going back to those prior price highs, we can see that this movement lower has created a condition in the relative strength index, which is the purple line at the bottom of the price chart. The yellow line is the moving average of the relative strength index. So as we can see here, this ultimate failure here at those prior highs did create a negative condition in the RSI. So this did create a scenario now where we're looking at trend momentum that is flowing in the negative direction. Given the fact that we did fail again at this recent price high, this would have come in right around this $5.50 mark. This is another reason that level is so important. But as we can see here, this really solidified this trend and has sent the relative strength index toward lower levels. What we can say at this point is that we're starting to approach oversold territory, which would mean that share prices are unlikely to extend much further in the downside direction. But what we would really need to see here would be a bounce in the RSI off of this lower trend line. So if this were to occur, we would have an upward trend line showing positive momentum for the stock that had been tested on 3 separate occasions. That would ultimately make it more powerful, stronger than this declining trend line here, due to the fact that it had been tested on more than 2 occasions. As we can see here, this upward trend line here in the upward direction, downward sloping, we can see that this has only been tested on 2 separate occasions. So it would be considered a bit weaker if we were able to bounce off of this trend line for a third time. So as things currently stand, that has not yet happened. We would need to see share prices sort of start to move higher here. And then if all of those factors were to occur, if all of those events were to occur, I would then expect to start to see share prices start to move higher and then ultimately break above this important $5.50 level. This is going to continue to be an important price zone to watch, however, because if we did see a third failure here, this would then create a triple top resistance zone, which is much more difficult to break. And if that were to occur, this could put more pressure on the downside for the stock, and it could make long positions much more difficult in terms of achieving profitability with your trading strategies. So here's the current market analysis and update for SoundHound AI Incorporated, stock ticker SOUN. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.